Good morning, children. Welcome to Accountancy online class. In this class, we are going to see about Introduction to Accounting. Children, let's move into the lesson. First, we'll see about the basic accounting terminologies that is used in accounting. First one is transaction. Transaction means transfer of money or value of goods, services, or any ideas from one person to another is called as a transaction. It is classified into two. One is the cash transaction and another one is the credit transaction. Cash transaction involves immediate cash receipt or immediate cash payment, whereas credit transactions will taken place, but the payment will be taken at a later time. It will be received or paid later. Next one is account. Account means it is identifying a person or a item in accounting. An account is opened individually for a person, asset, expenses, income, etc. In ledger, the account is a summary of transactions under a head. So in ledger, it is a summary of transactions under a head. Capital. Capital is the amount invested by a proprietor. Who is a proprietor? The owner is the proprietor. So whatever amount he has invested in the business is called capital. Drawings. Drawings means it is the amount, cash or value of goods, assets, etc. that is withdrawn by the proprietor for his personal use is called drawings. Next one is voucher. Voucher means it is a document. It is written or printed in support of a transaction. So a written or printed document in support of a transaction is called a voucher. For example, cash receipt, invoice, cash memo, bank pay-in slips, etc. These are the examples of voucher. So it is a written document or a printed document in support of a business transaction. Next one is invoice. Invoice is prepared by the seller of the goods and it will be given to the buyer. So it is prepared by seller and it is given to the buyer. So who prepares the invoice? The seller prepares the invoice and it will be given to the buyer. It shows details of quantity, price, value, etc. for the goods, and if any discount made, that also will be mentioned in the invoice. So it shows all the details of the quantity, price, value, etc. of the goods, and any discount that will also be recorded in the invoice. Next one is goods. Children, now let us see about goods. If any articles or things or commodities in which a business is dealing are called goods. For examples, if the business is dealing with furniture, then it will be goods for those who deal in furniture. Purchases means buying of goods with the intention of resale is called purchases. Next, we will see about purchases returns or returns outwards. When we will return the goods? When it is defective. So when goods bought or returned to the suppliers, it is known as purchases returns or returns outwards. Sales. So sales means when goods meant for resale or sold, it is called sales. It is called sales. Returns, sales returns, when the goods are defective, they will return the goods by the customers. Goods will be returned by the customers if it is defective. It is called sales returns or return inwards. So the other name for sales return is return inwards. Stock. Unsold goods that is lying in the business on a particular date are known as stock. Now we will see about income. Amount receivable or realized from sale of goods and earnings from interest, dividends, commission, etc. are called as income. And the next one is expenses. Any amount incurred in the purchase or sale of a product is called as an expense. And the next one is solvency. We'll see about solvency. Solvency means it's the capability of a person or an enterprise to pay any debts is called as the solvency. So it is the capacity of a person to pay the debts is called solvency. Insolvency means incapability of a person or an enterprise to pay the debts is called as the insolvency. Asset, any properties, any physical thing or right owned that has a monetary value is called asset. Liability. What is liability? It refers to any financial obligation of the business is called liability. Next we'll see about debtor. A person who receives a benefit without giving money or money's worth immediately but liable to pay in future or in due course of time is called as a debtor. So a person who receives a benefit is called as a debtor without giving money or money's worth. Creditor means gives a benefit without receiving money or money's worth is called as a creditor. We will see about depreciation and bad debts. Depreciation means gradual reduction in the value of fixed assets due to usage and passage of time. When we use an asset for many number of years, automatically there will be a gradual reduction in the value of an asset. Bad debts means it's a debt which cannot be irrecoverable. Children, now we will see about the branches of accounting. We'll see about the branches of accounting. First one is financial accounting. As the name indicates, it records only the financial transactions and events that have taken in the business. And it is historical in nature. What is historical in nature? Whatever the transactions and events which have already occurred is called as the historical in nature. And it also provides financial information to the users for taking any decisions regarding the business. It is concerned with identification, recording, classifying and summarizing of financial transactions. And it is helpful in preparing of financial statements. So what are the financial statements? That is the trading and profit and loss account. The other name for this is income statement and balance sheet. Balance sheet only will show the financial position of the company. Children, now we will see about cost accounting. So cost accounting means it is a collection, recording, classifying and appropriate allocation of expenditure for the determination of the cost of products or services and for the presentation of data for the purposes of cost control and managerial decision making. Now we will see about management accounting. Management accounting helps the management in decision making and in the day-to-day operation of an enterprise. The information collected from financial accounting, cost accounting are grouped, modified and presented as per the requirements of management for discharging their functions and for decision making. So all these informations are grouped, modified and presented to the management for carry out the functions and for taking any decision. The next one is social responsibility accounting. It is the presentation of accounting information by business entities and other organizations from the viewpoint of the society. Social cost incurred such as environmental pollution by the enterprise and social benefits such as infrastructure development and employment opportunities created by them. It arises because of corporate social responsibility. Basis of accounting. So there are three bases. First one is cash basis. Second one is accrual or mercantile basis. And the third one is mixed or hybrid basis. Actual cash receipts and actual cash payments are recorded in cash basis. So whatever the actual cash receipt and actual cash payment made are recorded. Credit transactions are not recorded till cash is actually received or paid. So only cash transactions are recorded and credit transactions are not recorded, but once the cash is received or paid, then it will be recorded. Cash basis. Any income received and any expenditure paid will be recorded. Any asset purchased for which cash is paid. Any asset purchase means whatever the properties that is purchased for the business and for which cash is paid. And any liability paid during the accounting year, whether it is related to the past, present or future, is taken into account. Next one is accrual or mercantile basis. So let us see what are the items that are recorded on this basis. Here any income earned, whether received or not, will be recorded. Any expenditure incurred, whether paid or not. Any asset purchased, whether cash is paid or not. Any liability incurred, whether paid or not during the accounting period, is also recorded. Now we will see about the hybrid or mixed basis. Here both cash basis and accrual basis are followed. Revenues and assets are generally recorded on cash basis, whereas expenses and liabilities are generally taken on accrual basis. So revenues and assets are recorded on cash basis and expenses and liabilities are on the accrual basis. Now we will see the internal uses of business. The first one is owners. The owners will provide capital to be used in the business. Owners only will provide capital to the business. Since they are contributing capital, they are interested to know whether the business has earned profit or not during the particular period. And they also want accounting reports in order to have an appraisal of performance and also for the assessment of future prospects. Basis for most of the decisions made by the management. Data required by management for planning and controlling the business operations. So they should know about the sales and purchases, efficiency of employees, capital structure and solvency position. The employees. So the employees are mostly they are interested in the profit earning of the business because that will affect their remuneration, working conditions and retirement benefits and stability and growth of the enterprise. Children, now we will see about the external uses. The first one is the investor. So persons who are interested in investing their funds in an organization, they should know about the financial condition of the business while making their investment decisions. So they are very much concerned about the future earnings and the risk-bearing capacity of the organization. And the next one is the customer. The customer who buy and use the product and services of business enterprises. So they are very much interested in knowing the details of the products and the prices charged to them. Next one is the government. Government, they need information about performance of the business units in different industries, helps the government in policy formulation for the development of trade and industry, allocation of scarce resources, grant of subsidy, etc. Now we will see about the role of an accountant. First, he is a record keeper. The accountant maintains a systematic record of financial transactions. He prepares the financial reports and financial statements. And next, he is the provider of information to the management. He assists the management by providing financial information required for decision making. And next, protector of business assets. The accountant records of assets owned by the business, which enables the management to protect and exercise control over these assets. Next, financial advisor. He advises the business managers regarding investment opportunities, strategies for cost savings, capital budgeting, provision for future growth, and development, expansion of enterprise, etc.
Students, let us recall what we have studied. We have studied about the basic accounting terminologies, branches of accounting, basis of accounting, uses of accounting information, and role of an accountant. Stay home, children. Stay safe. Have a nice day.
Thank you, children. Have a nice day.